Hello, you are listening to the OmniTalk Fast Five, brought to you in partnership with the A&M Consumer and Retail Group, Firework, SPS Commerce, and Sezzle. Headline number one, according to CNBC,
yes,
Walmart has sold Bonobos to WHP Global and Express for $75 million. Walmart purchased Bonobos back in 2017, for those of you who need the reminder, for a whopping $310 million, while the company was under the stewardship of former e-commerce president and your best friend, Mark Lorre.
Yes.
Terms of the deal are such that WHP will acquire the Bonobos brand for $50 million, and Express will get Bonobos' operating assets and related liabilities for $25 million. Jeff, that's one heck of a write down. We're so glad you are on the show.
Yeah, this finance guy for this.
I know. We
perfect.
Know what went wrong here, and what lessons should we all be taking away?
Yeah, anytime you're writing down $250 million, it's not a win.
Look, to put it simply,
that's the quote of the show already, coming in strong. Dialing it up, Jeff.
Look, I think it was an odd acquisition on the front end, to be honest with you. I think the Bonobos brand was pretty hot before the Walmart acquisition. And unfortunately, I think they cheapened it actually while they were trying to figure out how to make $100 plus chinos fit kind of within their overall portfolio. On the flip side of that, I actually do think that this is a win for Express, as you noted before. Getting this brand, these assets for $75 million almost feels like a steal, given it's a $200 million plus business. So there's incredible synergies that I think the brand has coming into the Express portfolio, and more importantly, their ability to grow their showroom presence and kind of store within a store opportunities will be another great complement, especially as you think about the Express menswear complement that they're trying to aggressively go after. It's a clear winner for one of the two, and a pretty clear loser for the other one.
Yeah, Jeff, I completely agree with you. Like, I actually think this is a really big win for Express. When you think about Express trying to become more relevant as a brand to the next generation audience, I think Bonobos is a great way for them to be able to do that. And like you said, $25 million, they're getting all the assets for the Expresses. And I mean, it seems
really cheap, actually.
Right.
Like, to Jeff's point, it seems like a really great value deal for them.
Right. It's a great experiment for Express. But Truett, what do you think about this? What are your thoughts? Do you have anything to add here?
No, I think Jeff did a great job explaining it. I think it's a really great asset for Express. And I do think there's a theme perhaps in the show today with acquisitions going wrong.
Yep.
Brings us back a little bit to what is the strategic intent of an acquisition? Do we have the core competency to derive the value out of it or not? And I think we'll have another example here in a minute that the answer was no as well.
Yeah, I agree. No, Chris, before I get to you for your rant, I mean, I think we're going to...
You think I'm going to rant, huh?
You
already know I'm going to rant.
You're going to rant, so I'm going to...
You're warning everyone.
We're going to close it up with you. I mean, my question is, like, was this ever... In what world was this acquisition going to work? I mean, they still remained completely separate brands, which I think was the issue here. Like, if you go to the Bonobos site still today, there's no mention of like leveraging any of the Walmart assets, like return to a Walmart in case you ordered this and you live in Arkansas, not New York City, and you don't have a Bonobos down the street. Like, there's no value coming from their partnership that I could find in the last few years. But Chris, I'm going to hand it over to you.
Oh, yeah? Well, you're really setting me up here.
Take your victory lap. What?
Yeah, I'm gonna dial it up to 11 here, right from the get-go.
No doubt.
Yeah, I mean, we've talked about this before, but this strategy was honestly, it was an effing joke from the very beginning. And to me, and I'm gonna be very pointed when I say this, it actually shows to me how little Mark Lorre knows about e-commerce. And I know that's hard for people to hear and want to believe, but it's true. I mean, he talked about this acquisition from the point of view of building a stable of brands to get more traffic to Walmart.com. But why do you need to spend $300 million to do that? You already have a marketplace. Just plug them into your marketplace at no cost to you. That's how e-commerce works.
Well, especially coming from diapers.com. Like, why aren't we looking at the practical additions to the marketplace versus like something that is completely separated from what the Walmart customer is accustomed to?
100%. And it's the same fact. It's the same thing with Moose Jaw, which they divested a few weeks ago as well. You're going to the high-end retailer space. you know nothing about that space. It adds no value to you. You could have easily plugged them into the marketplace in the same way. So this thing was 100% doomed from the start, to answer your previous question. And I've said that. I've been on record saying that for a long time. And so I think I hope people are listening, because it highlights a lot of questions about what do people really know versus what do people sell that they know in the marketplace.
Buyer beware.
Yes.
Buyer beware.